Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob, and happy Canada Day.
Yeah, hi, Jim. Yeah, it's Friday, and we're going into a long weekend. Very pleasant.
The market's kind of beaten up over the last couple of weeks. Does this mean we've had a major correction, or are we just going to continue lower?
Oh, no, it's had some bad news. As I describe it, Trump is trying to reduce protectionism against the U.S. that was built in for a long time. And then you get a country like China, oh, this is awful, we're going to retaliate. And then Canada says it's going to retaliate. So there's been some bad news. Politics in the U.S. have become very nasty when you have a congresswoman urging crowd people to attack members of the government, or at least of Trump's cabinet and assistants and people working at the White House. So the left can be nasty, and it is being nasty, but fortunately it's just a one-way street. The disturbances are of the left, and those who are not off the left probably have to work and don't have the time to get into the streets and create trouble. It's sort of a classic situation. But yeah, I think the stock market is a little oversold. I think the decline is kind of a wake-up. But importantly here was the bubble and the Bitcoin phenomenon, which was absolutely outstanding, what blew out in December, giving us all kinds of technical readings when it was up there. In one of our readings, it was hadn't had a signal like that in 2 years, so we figured that the biggest correction in 2 years, which it was, and then tried to rebound. And the measure on this is that during the summer would be the probable time when the great speculation could gather its forces and start to move those hot items up, and that hasn't worked out. You've got new lows being established in the sector, so that then says, yeah, the first hit was down to February, and then each rebound was lower than the one before, and now you've taken out the February lows. So you can say formally or technically from the chart that with new lows being established, the chances of restoring that bubble are now virtually zero. So you've had one of the greatest bubbles in history, blew out on schedule in December, and then in January on the senior stock indexes like the S&P, it gave some pretty good technical readings, and from which you would expect a sizable correction, which we did have. But the point being, Jim, is that the peak of speculation for the wildest was in December, and it led the peak in the senior stock indexes. So here we are now. The bubble items are setting new lows, and I expect that probably later on in the year that the S&P and the NASDAQ, these things will set new lows as well. The other thing is that this week, Hong Kong and Shanghai set new lows. And then you've got, I saw the other day, problems again with the Argentinian currency and interest rates. So their disturbance continues. The emerging market stock index, new lows. Emerging market debt instruments, new lows. So we have found that when you've got problems in outlying financial exchanges, that eventually it'll come into the senior exchanges. And Jim, that's with the provision that you've had a fabulous bull market. You know, if you're in a regular bull market and you got a problem in Asia, it might not hit New York or London that hard. But when you've been after a bubble, then everything is vulnerable. So, yeah, we'll see. I think at the moment, kind of oversold, and a recovery some weeks is possible for the senior stock index.
We'll have more with Bob Hoye right after this.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're chatting with Bob Hoye. Bob, what do you expect to see in the precious metals?
Yeah, that's a tough one. The play was a great speculation right out till 2011 when our indicators became very overdone. And then you also have had that in previous big financial manias like in 1929, the real price of gold goes down, and the gold stocks are the underperformers during the bubble. And then you get the condition where the bubble gets over, and ironically, it'll take non-performing gold stocks down with it, and that's likely in the fall. But it sets up the positive side for the gold sector, because in every great bubble, you have the real price of gold. That's the price relative to the CPI, and it reflects the cost of mining it. And if you've got the cost of mining going down relative to the price of gold, gold miners start to make money again. So what pushes this is that when you're in a financial storm, the really careful money goes to the most liquid items, and it doesn't care so much what kind of return it gets. You just want to park money and know you can get it out in an instant. And that, one of the most liquid items, of course, is gold. But then the other thing is that you got good liquidity in short-dated treasury instruments in the U.S., and that is an ideal place to park money because you got the liquidity. So then you have a bid for gold, but you also will have a bid for the U.S. dollar. So we don't see people making money in gold or gold stocks for quite a while. Some trading opportunities, which is all we've had for the last year. But we're heading towards an important low for the gold sector. And what I like about the story, Jim, as a history, is that in every post-bubble contraction in the past, the real price of gold has gone up, and the gold mining sector becomes very prosperous, and you get some speculative moves there too. Senior gold stocks will be going up, and the juniors will as well. There'll be exploration activity, and who knows, maybe even some discoveries. So the gold patch now, not good. The gold patch sometime next year could be good. So it's never jammed today, but always jammed tomorrow. But I think as we get there, we'll be able to identify the opportunity as it arrives.
Should you be buying gold now at this price?
No. But if you're in a country like, Canada, the Canadian dollar is going to go down because the federal government is such a disaster. But then you'll make money there, but not in U.S. dollars, or if you're in euros. So one always wants to have that. Some gold is sort of an insurance position, but I wouldn't have in mind that you're going to make a lot of money out of a good move up in gold. It would be tied to a financial problem. So, some gold, but don't try and make money out of it, because you want to have your money out of the markets. And even then, I can always laugh at this, where portfolio managers sense maybe the market's overdone. So what do? They go and buy defensive stocks. And what do those do in the bear market? Well, they'd go down slower than the most popular stocks. Why they do it? I don't know, because actually in a contraction, there is a good place to be. If you're in gold, you get no interest out of it. If you're in treasury bills, you get no interest either. Effectively, the interest rates will probably go to zero again. But if you step out and get some good corporate bonds, 3 to 4 year maturity, then the price action is not going to hit you. And then if you've got good quality bonds, then the quality risk won't get you. And so it's a good place to be. If you go to short-dated bills and stuff like that, you're going to eventually get zero. So, and then if you're a Canadian and owning U.S. corporates, you'll get the improvement with the rising U.S. dollar relative to the Canadian. So it's an ideal place to be in a storm. And will there be a storm? Yeah, I think so, because the bubble has been so extravagant, and the lead item on the bubble, which was the Bitcoin, it's now at new lows. So eventually the big board will follow.
We'll have more with Bob Hoye right after the break.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, crude has had a nice little recovery. Usually the Canadian dollar follows the price of crude. It didn't this time. What's the outlook for the Canuck buck and the outlook for oil?
Well, it looks like crude and the oil stocks want to go up a little further. We looked at that a few weeks ago, and where the base metals and base metal mining stocks were having a problem or going into a problem, I thought that maybe the oil stocks, which is the XLE, wouldn't break down until August, and we've had this very nice pop-up in crude oil on news, Iran reducing shipments, and up in the tar sands, there was a stop in production. So it's news. Maybe for the moment, or this week, the best is in for crude oil. And after August, there's some seasonal things on base metals, for example, copper can set a seasonal low kind of like November, December. And then if you look back on the chart for crude oil, oftentimes you can have an important low December, January. Lumber is in that one as well with a low maybe October, November. So the basic, let's call them food groups, the basic industrial commodities were likely to be good into May. They were, and they would be likely to be bad later in the year, and that's probable. So I wouldn't look for any long-term investments in the oil patch. You want to be out over the next few weeks, and then for patient money, there'd be perhaps a good opportunity later in the winter.
Bob, have a great Canada Day, and for our American listeners, a great Independence Day.
That one's coming up too, isn't it? And you have a good weekend, Jim.
Thank you very much, Bob. My guest has been Bob Hoye. He's a market historian at chartsandmarkets.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. You can forward questions to Bob or our other guests at info@HowStreet.com. I'm Jim Goddard. Happy Canada Day.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.